Well, the Asian markets, they're trading with a bit of a negative bias early this morning, following a very, very volatile trading session on Wall Street overnight. For starters, the Nikkei was trading lower. The Kospi as well as the Straits, all of them had started off in the red. Now the Nikkei has pulled back from the low point of the day. That could be of a couple of reasons. We have seen some selling over the last few days. And the Nikkei could be bouncing back because the yen as well, yesterday was at around 112.5 odd. Today it's holding at around 113.2. So some weakness being seen on the yen. That's good news for an export-oriented economy. But otherwise, the Kospi as well, that was down close to 0.3%. That's moved into the green. And let's see how the other couple of markets have opened up. Both the Straits and the Taiwanese index, the first tick was more or less flattish. The Taiwanese index seems to be the outperformer today. That's opened up with a gain of around 0.4%. The SGX Nifty has a lot of cues. We're going to be looking at the state elections outcome. But for starters, it's indicating a 140-point downtick on the back of a sudden resignation by RBI Governor Urjit Patel late last evening.
Yes, absolutely. We'll be tracking that story, but let's apprise you of what took place in the global markets. On Wall Street, stocks closed higher as major indices bounced back from earlier losses on renewed confidence in the strength of the economy, offset lingering worries over the US-China trade dispute. The Dow Jones Industrial Average closed 34 points higher, erasing a 500-point drop. The S&P 500 rose 0.2%, while the tech-heavy Nasdaq jumped over 0.5%. CNBC's Aditi Roy gets us a wrap of all what took place on Wall Street.
U.S. stocks finishing slightly higher thanks to a big reversal in Apple, which spiked after hitting a key technical level. The Dow adding 34 points, though it had been down more than 500. The S&P up 4 points and the Nasdaq higher by 51. Job openings back over 7 million in October, nearing a record high. It's the second highest level in history, trailing only the August reading. There are 1 million more jobs than unemployed workers, according to the Labor Department's most recent count. Meantime, the pound tumbling to its lowest level in over a year following the announcement that the UK government will postpone a critical Brexit vote. Prime Minister Theresa May telling Parliament she's decided to pull the vote scheduled for tomorrow over lawmaker concerns on how to manage Northern Ireland's border. That announcement had pushed stocks to their lowest levels of the day. And oil prices falling another 3% today on fears over global economic weakness and demand concerns. That erases the gains we saw Friday following OPEC's decision to cut crude output. That's the action from the U.S. market. Back to you in Mumbai.
Well, turning attention to the European markets, they ended with cuts yesterday. Quite a few worries playing out there. We had slowing growth, you had crude oil prices that was lower, and this after Prime Minister Theresa May delayed, in fact, the Brexit vote in the UK Parliament. The pound should come up for you on the screen. That sunk to a 15-month low in an already very fraught Brexit process. CNBC's Wilfred Frost filed this report on the key developments around Brexit.
UK Prime Minister Theresa May called off what had been billed as a make-or-break final vote on her Brexit plan, which was due tomorrow because she feared defeat.
If we went ahead and held the vote tomorrow, the deal would be rejected by a significant margin. We will therefore defer the vote scheduled for tomorrow and not proceed to divide the House at this time.
And she was mocked in Parliament as she explained her reasons why.
I've listened very carefully to what has been said in this chamber and out of it. To what has been said in this chamber and out of it by members from all sides. From listening to those views, it is clear that while there is broad support for many of the key aspects of the deal, on one issue, the Northern Ireland backstop, there remains widespread and deep concern.
She now heads to Europe, hoping for major concessions from European leaders, particularly on that issue of the Irish backstop, something that seems difficult based on this tweet from the President of the European Council, Donald Tusk, who said, quote, "We will not renegotiate the deal, but we are ready to discuss how to facilitate the UK ratification." The British pound had a torrid session off the back of all of this, hitting a 20-month low due to fears of a no-deal disorderly Brexit that could destabilise financial markets and question marks about the Prime Minister's own future. That said, she has salvaged a couple of weeks in order to try to save her deal and with it, her political future.
Okay, well, on to the big story today. Amidst a rift with the government on several issues, Reserve Bank of India Governor Urjit Patel has resigned with immediate effect. This comes just days ahead of a crucial board meeting that was meant to discuss the progress on issues raised by the board's government nominees last month. In a statement, Urjit Patel cited personal reasons for his resignation. He went on to say that it has been my privilege and honor to serve in the Reserve Bank of India in various capacities over the years. Patel's resignation makes him the first governor since 1992 to leave in just 2 years. His 3-year term was supposed to end in September of 2019.
And Prime Minister Narendra Modi called Urjit Patel a thorough professional with impeccable integrity who leaves behind a great legacy. Finance Minister Arun Jaitley said it was a pleasure to deal with Urjit Patel and benefit from his scholarship. We reached out to former RBI governors Mr. Rangarajan as well as Mr. Raghuram Rajan, as former Prime Minister Manmohan Singh and Finance Minister P. Chidambaram. Let's listen in to what they had to say.
Well, I don't know why he has done it, but as a long-term friend and admirer of Urjit, I feel very sad at this development.
I'm not surprised at all. According to me, he should have resigned on November 19, which I said was a day of reckoning. I think they partially humiliated him on that day. He may have thought that the government would retrace its steps. I knew it would not. And why go through another humiliating meeting next week? But I think his resignation is good for him. According to me, no self-respecting scholar or academic can work in this government. It leaves it in tatters. When government forced the RBI to concur in demonetization, the reputation of RBI was substantially ruined.
I do think this is a serious issue. It needs to be dealt with carefully. The government has to ask what led to this resignation. Resignations are not frequent at the RBI. This is probably only the second resignation in its history, maybe the first explicit resignation. And therefore, we have to look at the circumstances that led to it. It's a statement of dissent. And therefore, the government has to be very careful in dealing with it such that the autonomy of the institution as well as its credibility is preserved.
I'm indeed very surprised to hear this. I thought that the last board meeting resolved most of the issues. Therefore, I do not know what fresh issues have risen after that. But I'm certainly surprised. And I think the resignation by the governor has its implications. I do hope the government comes out with some clarificatory statement so that we understand why and what happened.
And the other big event to watch out for today will be counting of votes for the 5 states of Rajasthan, Madhya Pradesh, Chhattisgarh, Telangana as well as Mizoram. Now, exit polls had predicted a tight race in Chhattisgarh and MP, while Congress had the edge in Rajasthan. Shireen is here with what we can expect. Shireen?
Well, it is going to be a challenging day of trade, isn't it? RBI Governor Urjit Patel's resignation is not the only factor that the markets will have to contend with. They will have to deal with the election verdict. Remember, the exit polls did seem to suggest that the BJP was on the back foot and that the Congress was perhaps ahead, just perhaps by a whisker in the crucial states of Madhya Pradesh and Chhattisgarh. The question now is, if indeed the exit polls are proven right, what kind of price erosion will that lead to? Most market experts that we've spoken to do seem to suggest that while the markets have priced in a win for the Congress party in Rajasthan, they haven't quite factored in a 3-0 setback for the BJP, if at all that is in fact the case. The government, as well as the BJP, very, very confident, still maintain that not just Madhya Pradesh and Chhattisgarh, they hope to return to power even in the state of Rajasthan. The Congress equally certain. They do believe that they're home as far as Rajasthan is concerned, and also confident that they will bag at least one more state. Could it be the crucial state of Madhya Pradesh, where the exit polls seem to suggest it could go down to the wire, or could Chhattisgarh throw up the surprise? As far as Telangana is concerned, it looks like the TRS is ahead, even though that the TDP and the Congress combined may put up some kind of a fight. But so far, the exit polls clearly favor the TRS retaining power in the crucial state of Telangana and Mizoram, which is the last bastion of the Congress party in the northeast. Exit polls seem to suggest that the Congress may be in trouble. So we will know whether that is in fact the case or not. So most parties at this point in time not reacting too much, going in with a sense of confidence, but that's what they're expected to do. So stay tuned to CNBC TV 18. We will decode the election verdict right here.
Okay, all right, Shireen, thanks very much for that. Well, on Dalal Street yesterday, weak global cues and disappointing exit poll results for the BJP in the assembly polls for 5 states really weighed in on the markets. But today, it will be all about the reaction to the Governor Urjit Patel's resignation and the outcome of the state elections. Anuj is here to give us a sense in terms of what we could expect. Anuj, SGX is not indicating anything great right now.
Yes, sir. Morning, Nigel. Morning. Deja vu, right? I think 2.5 years back when Raghuram Rajan had resigned, and we are looking at almost similar situation. And I think I remember making this point that institutions are bigger than individuals, and perhaps the market will move on. The SGX Nifty is indicating a big gap down, of course. In market, there are a few things which I always remember. The big money is made when you price in something and the reverse of that happens. That is when you make the biggest money. Of course, on a day-to-day basis, you trade, you do whatever. The market right now is dealing with too many negative cues. There's, of course, the volatility in global market. There's Urjit Patel's resignation. Markets priced in, weak assembly poll outcome as well. But remember, like last time we had a big rally post-Rexit, the only difference or the only caveat is that during Rexit, we had a full-fledged bull market in that, you wanted to buy all dips. This is a bit different. This is where we are going through a bit of a volatile phase in the market. So what can happen? My sense is with the way SGX Nifty has fallen after the last 2 days decline or after yesterday's decline, the market has priced in a worst-case poll outcome. And if the BJP has to win 2 out of the 3 states, you can expect a lot of short covering, and all this, doomsday talk of FIs deserting market and, democracy in danger and all, that will be thrown out of the window. As simple as that. In financial markets, money is chasing returns, and, that is what's going to happen. So my point is, or my view is that after a huge gap down, there's no point shorting. In fact, today's day, you just want to perhaps stay on the sidelines for a bit and see how things are moving. And for investors, it's an opportunity to add quality. And look, this morning there are some positive cues to latch on to. I think the Vijay Mallya news is a big positive. Crude is back to below $60 a barrel. That's a big positive. And I think it's a bit counterintuitive, but the fact that Urjit Patel is no longer the RBI governor would also mean the stocks which struggled under his tenure could make a bit of a comeback, for example, Kotak, Yes Bank. So I think that there are positives to latch onto for this market. The decider, of course, is still going to be the assembly poll outcome. And if the BJP is able to win even 2 out of the 3, my sense is it won't surprise me if at some point the market even makes an attempt in the green territory. And, perhaps those who buy the dips make a lot of money. But all this is dependent on the outcome. The market, from my point of view, has priced in the worst outcome. We are not at 11,800. We're at 10,300. If at 10,300 you're getting negative on the market, I think, that's not how you should weigh the risk reward.
Okay, all right, Anuj. In fact, just around a week ago, we were at 10,950. So, we've already seen a correction of around 450 points from the recent peak as well. The bulls would be thinking, in cricketing parlance, Anuj, they were ready for the whacker, big bouncy track, and suddenly you have a 5th day, a bunker day track out there where the ball is turning. So, you're dealing with both those two as well.
Exactly. I don't know, just one more point since you've given the cricketing analogy. Just one of those days where you try to defend in the first hour, protect your wickets, and once the bowlers are tired, you just whack them out of the park. 2014, remember, who made the most money when the market hit the circuit? Those who were able to, buy good quality stocks in the uncertainty preceding that. After that, you had 1 day where the market gave you 20% and then did nothing for 6 months. So, it all boils down to buying. bear market is the best time to buy good quality stocks. Bull market is a good time to offload those, but in a bear market, you buy good quality stocks.
Okay, all right, Anuj. Thanks so much for that. Well, we spoke to a whole host of experts on what they make of the RBI governor's resignation. Let's listen in to what they had to tell us.
His resignation is a clear sign of the government trying to interfere with the working of the RBI. They're trying to destroy the autonomous character of the bank that is its due. And I personally feel that after the resignation of Urjit Patel, there is no reason for the finance minister to continue in his post. The foreign investors will read it very badly. They will be more convinced than ever before that everything is not all right with our system, that it is not merely the issue of one individual, it is the collapse of a system.
I'm sorry to hear that. It's very unfortunate that this has happened, because it would certainly indicate to a lot of people that the autonomy of the Reserve Bank is at risk at the moment. I don't think it could be any one single factor. It's a combination of what perhaps has been going on for a long time. And maybe I think one of the factors which could be affecting this is the fear that even the board is no longer independent, and it is becoming an extension of the government. And therefore, the governor may be feeling that his ability to function is to some extent being restricted.
In this situation, foreign investors would be the least of my worries. I'm generally concerned about the country as a whole, the reputation of the Reserve Bank, both domestically and, of course, internationally. And so I think all these issues we'll see in the hours and days to come in terms of how the government manages. I do hope that the idea that Reserve Bank and the central bank is separate from the government should be managed much better, in that the central bank of any country is, in the ultimate sense, very much part of the government as a whole. And there really needs to be a much better, more cooperative relationship.
Okay, well, let's now go across to Lata Venkatesh on what her take is on the big resignation last evening. Lata.
Well, first up, the things that we would want to know is why. It's quite clearly the February 12th circular which had started off the standoff between government and RBI, because that meant a lot of assets would be taken to the NCLT. But the RBI was firm on the cleanup and did not entertain any requests. Thereafter, the big issue was the RBI's capital itself, where again the governor said no, and then the matter went into the government issuing consultations or starting consultation under Section 7. Then after the debt market problem started, the issue was the government removing some of the RBI removing some of the banks from PCA because the debt market was in trouble. Some of the loans of the NBFCs had to be bankrolled, and there were too many banks under the prompt corrective action. The RBI governor absolutely refused to do that, because he said they were weak banks and we won't allow them to bankroll weak NBFCs, because that would be asking for trouble. So those were the three important standoffs. And then there were other things like lowering Basel capital norms so that all banks could lend more and bankroll NBFCs so that this crisis doesn't become nasty. Again, governor saying that Indian banks underprovide for loans and therefore Basel norms should not be lowered. And then there was a bit of a patch up in the sense on November 19th, the Basel norms were reduced. But I think what finally may have been the straw on the camel's back is the board is now going to dictate to the governor what decisions he should take. That was the pattern that would have been legalized in the December 14 board meeting upcoming. Now, we don't know if the board meeting will happen because the man who calls the meeting is the governor and he's not there. It was very clear. I mean, the the guess we have, and all this is speculation, Dr. Patel, at the best of times, is a man of very few words. On his resignation, there are no words at all. So the expectation is, or the speculation is, that the board would dictate to him. He took the job that he would dictate to RBI. He would run RBI. Now, if he's a chief operating officer to a board which will tell him what to do, clearly his service conditions have changed and he has decided to quit. It could also be, other things like a line of credit for NBFCs, other things he refused. But fundamentally, it appears that he will not take dictation from the board. The next governor who comes may be amenable to the idea that, yes, I'm not the CEO, I have to take directions, but this governor was not appointed with that service condition. And that could have been the reason why he resigned. Now we have to look at the hereafter. That's what the markets will look at. The markets will look at whether the government is doing everything it wanted to do and which the RBI said no. For instance, does it rapidly take out banks out of the PCA? Does it lower Basel norms? Does it give a free hand, a line of credit to NBFCs, a line of credit to MSMEs? If all these things are done without let or hindrance, we could have a problem. Or if the RBI's capital is touched. But if all these are done in a dignified manner, the RBI's capital is not touched, an expert committee is appointed, and it is done in a kind of legal manner, judicial manner, judicious manner, then perhaps the market will take this in its stride. Dr. Patel was clearly singularly unfortunate in that he had very, very difficult events that happened during his tenure. As soon as he joined, he had to take the demonetization process, something which quite clearly from hindsight he was not happy about. And then the PNB fraud happened, again, not his making, but happened during his term. And then IL&FS, again, not his making, but created the debt market problem. So I guess a victim of very unfortunate events.
Okay, all right, Lata, thanks so much for that. Well, on that note, we'll slip into a short break. On the other side, Parliament session starts today. More on that when we return.